Hello everyone, welcome to Options with Doug. Streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in large cap tech stocks that I trade, as well as the equity index futures, the SP 500 and the NASDAQ. And for the SP 500, SPX is the underlying index, SPY is the ETF version of that index, and ES is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and NQ is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis. And for setups. And when I talk about setups, I will be focusing on an underlying asset. And setups in that asset can be taken with either shares, futures, or options. Questions and comments are welcome. And I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today. Wednesday, May 15th. First of all, I want to go over news items for today, economic data and events. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with economic data for today. There was a couple of large data releases, particularly CPI data, that came out at 8:30 a.m. Eastern Time. And CPI data, you can see here, came in just a little bit lower than expected, lower than the previous number, and the market interpreted this as very bullish news. And then retail sales. Retail sales came in lower than expected, also lower than the previous number. All right, so again, the market interpreted this data as bullish. And we'll take a look at that in just a minute. For the rest of the week, tomorrow building permits come out at 8:30 a.m. Eastern Time. That is noted as a high impact event. I'm not Not sure about that. Certainly not as high impact as CPI. And then on Friday is the May options expiration, monthly options expiration. Let's take a quick look at that. This is the expiration concentration for the S&P 500, NASDAQ, and Russell 2000. The vertical axis is showing market makers delta notional, and the vertical axis is showing the different expiration dates. This is the May expiration coming up on Friday. The orange bars are showing call delta, blue bars showing put delta. Pretty obvious this is a very call-dominated options expiration. A lot of those calls that are helping to support the market will go away and typically will allow for more volatility after expiration. And often expirations are a turning point. We'll see that on the SPX chart in just a minute. Kind of a tone shift, key turning point in the market. All right, so that's the May expiration. Just in case you're curious, this is the June expiration. And the quarterly, monthly expirations, March, June, September, December, are typically the largest options expirations. All right, so again, the May expiration coming up on Friday, call-dominated options expiration. All right, let's take a look at the S&P 500 now. All right, I will tell you that this morning there was a pretty significant latency with rhythmic data after this reaction to the CPI data and the retail sales. Very bullish reaction, chop after that. So the levels before 10 a.m. not necessarily correct, and even worse on the NQ chart. So there again, I had a problem with significant latency in Bookmap. It's still that you can see occasionally this note that comes up, in red note that comes up in the upper left corner. It was at one point over 1,000 seconds this morning. So I'm primarily trading stocks now, so I just did not close and reopen Bookmap. It takes me too long to set up Bookmap. All right, so let's move on to positional analysis now. So again, this is the S&P 500, ES futures, and Bookmap. And hello, Caesar. Welcome. Glad you're here. All right, so quite a few levels on this chart. All right, Caesar says, thanks for sharing. Also had a massive delay. Tried a bunch of stuff to help, but nothing did. So, yeah, you just have to wait for the rhythmic to catch up with the actual data. So, you know, if you're intent on trading this S&P 500, certainly I would suggest SPY charts for the S&P 500 and QQQ charts for NASDAQ. All right, so this is the S&P 500. And before I do take a closer look at all the levels on this chart, I want to step back and take a look at a higher time frame. I'm going to go to the SPX. I'm going to start with a one-day chart. We've all seen this chart before. Quickly, 5-month rally began October 30th last year, and correction began April 1st. And then this current rally, taking SPX now today to new highs, began the Monday after the April expiration. So you can see the turning point there on the Monday after April expiration. All right, so let's take a look now at a 1-hour chart. Oops, wrong chart, sorry. 1-hour chart. This is showing the beginning of the rally after the correction. Again, the Monday after April expiration. Now, SPX to new highs. The previous high was right around 52.65. So today, SPX trading up at a high of right around 5,300. And that is at the call wall. So let's take a look at the levels on this chart. First of all, let me point out the daily and weekly expected moves. So the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. And it's updated once a week. These levels stay in place for the entire week based on the closing price for SPX on Friday. Then the dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, the closing price from yesterday. I do post these levels in Discord, the Options-Doug chat channel, every evening the day before. So SPX now trading above the upper weekly expected move and the upper daily expected move. And the dark red lines on this chart are Spotgamma levels. These are provided to Spotgamma subscribers. They're proprietary levels. They're based on gamma-weighted open interest. Let me point out the key daily levels. So first of all, here's the put wall at 5,000. That's a strike with the largest net negative gamma that can be expected to act as support. Certainly not in play today. And the next level up is right here at 51.95. That is Spotgamma's proprietary volatility flip level, the volatility trigger. Below that level, market maker's position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And just above that is the 5200 absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And that level did shift up from yesterday. So yesterday, the absolute gamma strike shifted down from 5,200 to 5,000, and now today shifted back up to 5,200. And then finally, the call wall at 5,300. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. And we'll take a closer look and see if it is doing its job, acting as resistance. All right, so those are the key daily levels, spot gamma levels. So the only level that shifted was the absolute gamma strike, shifted back up to 5,200. Let's wrap up our view of SPX with a 1-minute chart. So we can see the upper weekly and daily expected moves. SPX trading above both those levels and now finding resistance at the 5,300 call wall. All right, let's go to Bookmap. So in Bookmap, I have my own cloud notes, so I can show SPX levels, SPY levels, and key levels for ES. So here's ES, upper daily expected move. I do calculate that independently from the SPX daily expected move. All right, let's zoom in on this so we can see the more relevant levels trading now. All right, so here's the 5,300 call wall. That is SPX 5,300 and the 52.99 combo 1 level just below that, and then SPY 529 just above that. All right, I'm checking questions. All right, so those are the levels in play for today, for right now, currently. Call wall expected to act as resistance. So far, it's doing its job. All right, Anurag asked, could you show how you got the levels around 53.24 on ES? And also the logic behind all the ES levels today. All right, so the logic behind this, I'm taking levels from Spotgamma. Let's take a quick look at that. And what I do is I go to the home screen here, and I take a look at these index levels. Click on SPX. So here are all the levels. And there is a difference in price between ES and SPX. Today it's about 24 points. That is what Spotgamma is showing. So SPX 5000 is equivalent. The equivalent level on ES is 5024. That's what I'm using. So I take all these levels and I add them to my spreadsheet here. So I do this manually. Sometimes there is a, well, first of all, these support and resistance levels are typically not shown on the Spotgamma levels, and I want to show SPY levels and ES levels and SPX levels all in one column. So I do it all with this price lines add-on. So I take all these, I take all these numbers right here, and then I put them in my spreadsheet here. And then they're shown on the chart. So the logic behind the levels is all from Spotgamma. All right, so call wall acting as resistance. So again, Anurag, logic behind the levels is Spotgamma. That's their levels. And that's how I get them on my ES chart. And Jason asked, what do you mean call wall? So call wall is a proprietary Spotgamma level. If you want I guess a detailed explanation, go to spotgamma.com and go to the free resources. Essentially, it is the strike with the largest net positive gamma and can be expected to act as resistance. So if you want more detail than that, go to spotgamma.com and take a look at the information there, the free resources, the support center. All right, so again, I have SPX levels, SPY levels, and key ES levels all on this chart at one column here. And I use price lines to display those levels. All right, so SPX shifts in levels. Again, only level is shifted higher, the 5200 absolute gamma strike. And for SPY, the volatility trigger and call wall shifted higher. So that is key for SPY. Now the SPY call wall is still up above. So according to this, for the S&P 500, there's still room to run higher to the SPY call wall. All right, let's take a look at NASDAQ now. All right, so my NASDAQ chart is even worse than the S&P 500, I think, due to the latency. So reaction after the CPI data release, very bullish. And this, right around 10 a.m., this is showing that NASDAQ moved down to 448, whereas NASDAQ actually moved down to 447. So let's take a look at QQQ chart. So we'll take a look at the underlying index chart. Start with QQQ. Zoom in on this. Reaction after CPI, that's before the cash open, shown in the shaded area to the left. And you can see right around 10 a.m., or actually before, maybe 9:50, something like that. QQQ moved down to 447. Looks like I need to add more lines above. All right, so QQQ now trading above its 450 call wall. So initially a little bit of resistance there. Whoops, wrong tool. A little bit of resistance, then support as NASDAQ continues to move higher. Also, I think, to all-time highs. All right, so that's QQQ. Let's take a quick look at that again. So right now, QQQ trading up around 452. I need to adjust these levels. So let's go back to Bookmap now. So now looks like this level is correct. So NASDAQ trading up above the QQQ 452. And let's take a look at the NDX chart. NDX also trading above its call wall at 18,500. All right, so again, this is the NQ futures and Bookmap. We'll take a look at setups in a few minutes. So here are the call walls that I mentioned. NDX 18,500 call wall, and the 450 QQQ 450 call wall down below that. So NASDAQ trading above both call walls. Well, again, we'll take a look at setups in a few minutes. All right, let me check for questions. SK asks, can we see stop losses on Bookmap? Yes, you can. Let's go back to ES. So you can see on futures, CME futures, yes, you can see stop losses. So this is the stop loss indicator. This is part of the MBO bundle. So this is only for futures, showing buy stop orders, helping to fuel the move higher. Also shown with the on-chart indicator. All right, so yes, you can see stop losses, stop orders as they're executed on Bookmap. And SK Sarif also asked, can you speak louder? I'm sorry, I have a microphone right in front of my face. I've set the gain as pretty high. So if anyone else is having a problem with volume, please let me know, and I'll see if I can do something about that. All right, WRB says, sound good. So if you're having a problem on YouTube, you might try Bookmap Discord. Hello, Stephen. Welcome. Glad you're here as well. All right, so let's move on to setups now. Actually, let's take a quick look at Gamma Notional, and then we'll move on to some setups. So let's go to Index Matrix, just to note. And we know that the NASDAQ and S&P 500 trading well above their volatility triggers. And by the way, shifts in levels for the NDX, volatility trigger, call wall shifted higher, Put wall shifted lower, not significant, and there were no shifts in levels for QQQ. All right, so let's take a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note all these numbers are positive. In a positive gamma environment, this indicates that traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. And all those numbers did shift higher from yesterday. All right, so let's move on to setups. So everything that we've looked at so far, the levels that I've talked about, that's based on static data. Spotgamma takes open interest data, applies their algorithms to that data to come up with those levels. Now let's move on to execution, real-time data. So the first thing that I want to take a look at is what options traders have been doing today. And this is the S&P 500 combined signal. What this chart is showing, this is the HIRO signal, H-I-R-O, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. This chart is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The first, the white line, is showing price for SPX, and the purple line is the HIRO signal, showing options trades and market maker hedging activity, again for this combined signal. A falling HIRO signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. And a rising purple line, rising HIRO signal, indicates traders are taking positive delta positions. They are buying calls and or selling puts. I'll get to this in more detail in just a moment. Just wanted to point out, looks like a cluster of flow alerts here indicating potential consolidation. All right, there are two charts for the S&P 500. This is the traditional signal showing that combined signal for SPX, SPY, ES futures, and the next newer signal is this S&P equities. So this is another combined signal, but in this case showing an aggregate signal of all the S&P 500 components, all 500 stocks in the S&P 500, very bullish. So we can just stick with this. So let's zoom in on this chart. And we can see from the opening, traders were taking positive delta positions. For about the first 5 minutes, a little bit of consolidation. Price moved lower, then right around 950. Traders started taking positive delta positions again, and price responded higher and continues to move higher. All right, so note the time there. That's showing the reversal, maybe right around 9:55, something like that. For SPX, now let's go to Bookmap. All right, Bookmap is showing this reversal at 10 a.m. So remember there was a significant latency with rhythmic this morning. So on Bookmap, this reversal is coming in at 10 a.m. right around this cluster of levels, 5264. I think that is correct. Let's take a look at the order flow on Bookmap. Just assume this is 5 minutes earlier. So the volume dots in Bookmap are showing market buy minus sell. Let me see if I can expand this chart just a little bit. Volume dots show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So sellers are exhausted here. Also a little bit of a sell stop run down to right around this 52.64 level. Aggressive buyers starting to come in. You can see the rising cumulative volume delta. We know that traders are taking positive delta positions. Market makers take the opposite side. They are buying futures, buying stock to hedge their delta exposure. And price moves up, consolidates right around lunchtime, and then starts to move higher. So during this consolidation, aggressive sellers come in. You can see all the magenta volume dots. Then aggressive buyers start to come in, and price breaks above the upper daily expected move. So this move higher is fueled by options trades and cumulative volume delta aggressive buyers, as well as buy stop orders. That's shown by the rising yellow line. So it looks like the S&P 500 is now working to break above the 5,300 call wall up toward the SPY 530 call wall. All right, let me check for questions. All right, Anurag asks, should we look at the S&P 500 signal or the SP equity signal? There is a difference most of the time. Yeah, it's hard to say. Sometimes one signal provides a little bit more clarity than the other. It's hard to say. So you just have to, you're going to have to judge for yourself every day. So that adds some additional clarity, but a little bit more complexity as well in looking at analyzing the S&P 500. So typically this S&P 500 signal, the traditional signal, is a little bit more noisy, a little bit more up and down. There's a lot going on here with dispersion trades and hedging, and so this S&P equity signal, I think, is probably a little bit cleaner. And certainly it looks like that in this case. All right, so Floyd's Garage asks, hello Floyd's Garage, asks, is above expected move bullish? Not necessarily. I interpret that as neither bullish nor bearish. I look at an expected move as a potential, an upper expected move as a potential resistance level. And if it doesn't act as resistance, I suppose that is. I suppose that is bullish. Those expected moves, I think, are secondary to, first of all, the Spotgamma levels, as well as what's going on today. All right, so Boo asks, what about NQ and MAG-7? So let's move on to NASDAQ. So for NASDAQ, this is the traditional signal. The NDX combined the NDX and QQQ options trades into one signal. This is the one that was here first. This is similar to the SP 500 signal, combining options trades, market maker hedging activity for NDX and QQQ. And this MAG-7 signal was introduced several months ago. This is what I have been using for the NASDAQ. And it is often very similar to this S&P equity signal. You can see basically this S&P equities is MAG-7 plus 493. So there is, I would say the MAG-7 signal typically is more than half of this S&P equity signal. So let's compare notional value for today. 4.9 billion for the S&P equities. versus 3.35 billion for MAG-7. And this MAG-7 signal is a combined signal for the stocks known as the Magnificent Seven. So it's showing options trades, market maker hedging activity for a combined signal of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. So this is what I have been using for NASDAQ. All right, so Floyd's Garage asks, okay, what about I assume any, if you're talking about the S&P 500 or NASDAQ, moves above the call wall, so if price moves above the call wall, especially for an index, the S&P 500, Spotgamma assumes that index is overbought, and their stats show that price will move down below that level. I guess the forward 1 day and 5 day returns after that breach of a call wall are typically negative. Now that could change if the call wall moves up higher tomorrow. So we'll know that tomorrow morning. Otherwise, a move above the call wall is typically overbought, but I wouldn't, certainly I think the S&P 500 has room to run up to the 530 call wall for SPY until I would consider it overbought. All right, so let's take a look at the NASDAQ. I'm going to look at this MAG-7 signal. So again, the turnaround happens right around 950. Traders start taking positive delta positions in the MAG-7 stocks. So when traders buy calls, for example, let's see what they're doing. Let's go to puts and calls. So they're buying calls. That's shown by the rising orange line. I'm going to have to jump back to avoid the auto zoom. So they started buying calls. Call buyers shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They're also selling puts. That's shown by the rising blue line. So they're buying calls and selling puts. Blue line, orange line moving in the same direction. That's a very powerful directional indicator. In this case, it is bullish. All right, so let's take a look at NASDAQ. Go to NASDAQ. Still just a little bit of latency. So NASDAQ trading well above the call walls. Continues to move higher. So remember the latency and also the issue with levels. We'll just take a quick look. Volume dots. Magenta on the way down. Sellers are exhausted. Price reverses higher. Green volume dots come in. Cumulative volume delta rising. Buy stop orders fueling the move higher as traders take positive options delta positions. All right, let's move on. Let's take a look at some stocks. One thing that I want to take a look at, so this is Apple. This is today. I want to take a look at one setup from yesterday. I did post this in Discord and on Twitter yesterday. Wanted to do a quick review. This is Meta from yesterday, a bullish setup, long setup, and I want to go over what I was looking at in this chart really quickly. So first of all, just after the open, that's shown with label 1 here. This is a key level reversal. So this is the 460 hedge wall, put wall, key level reversal, right at that level, just after the cash open. And remember, data came out at 10 a.m. yesterday. Well, Jerome Powell speaking at 10 a.m. yesterday. So PPI data came out 8:30 a.m. Eastern time, and then Jerome Powell speaking at 10 a.m. So there was a lot of consolidation up till Jerome Powell began speaking. All right, so just after 10 a.m., you can see the shift from magenta volume dots before. You can see all the green volume dots coming in. and then pullbacks as Meta was moving higher, and each pullback lines up pretty well with this. This is the market pulse price change indicator, giving a confirmation of the pullbacks. For a long entry, if you missed this initial entry right at VWAP and the 463 level. So looking at a checklist here, I'm looking at, first of all, let's take a look at that. Let's take a look at the hero signal now. So it was just a little bit behind, acting more as a confirmation. So hero signal started to move higher. Let's say around 1010. All right, so we know that traders were taking positive delta options positions. Then going through my checklist. So I know that the hero is rising. Aggressive buyers are starting to come in. I can see by the green volume dots there, as well as the move higher and cumulative volume delta shown by that magenta line in the volume dot. Prices above VWAP, that's shown by the light blue line there. So key level reversal. Aggressive buyers start to come in. Price moves above VWAP. Options traders are taking positive delta positions. Price targets above at the high liquidity levels at 468 and 470. So checks all my boxes on my checklist for a long setup. All right, so that's yesterday. Let's move on today. All right, so this is Apple. And note for Apple, 190 is that's the call wall, I believe. Let me check. So let's take a look at hero for Apple. Yeah, 190 call wall. All right, so let's check for Apple. Checklist. Flow alert comes in. Traders buying calls, taking positive delta positions. Price target at the 190 call wall. So we know that traders are taking positive delta positions, buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, so let's go back, take a look at Apple again. Very obvious target, 190. This is the heat map and Bookmap showing a history of the limit orders in the order book. Note there were some orders in the order book before the cash open, and then a lot more orders came in right after the cash open. So we know that hero is rising. Price moved above the VWAP, Cumulative volume delta rising. Checks all the boxes for a long entry. Not many opportunities to enter after this quick move higher, right around 950, 955. Quick move up to the 190 call wall. All right, let's take a look at AMD. All right, Anurag asked, can I talk about what the market pulse indicator, again, what it, for Meta, what it shows? All right, Anurag, also, where do you get your DX data feed from? I subscribe in the Bookmap portal. So in the Bookmap portal, you log into your Bookmap account, and you can subscribe to DXFeed data for stocks. So that's where I get my DXFeed data. We'll take a look at I will get to Microsoft and NVIDIA. Both have the market pulse. I have the market pulse indicator turned on for both of those stocks. So we'll take a look at it then. All right. So the next is AMD. Bullish day in AMD. Semiconductors very strong today, NVIDIA and SMCI as well, Supermicro. All right, so let's take a look at AMD. Just looking here, checks the box for a long entry, rising cumulative volume delta. Price moves above VWAP. Break above VWAP there just after 10 a.m. Pull back to VWAP. All right, let's see what options traders are doing. Go to Hero for AMD. Not quite as clear as Apple. We'll zoom in a little bit. From the open, traders are aggressively buying calls. Flow alert comes in. Note that 155 as the call wall acted as support, not resistance. So a call wall breach. Price moving with calls, and traders start buying calls again right around 950. Also selling puts, that's shown by the positive notional value here. And note they take their foot off the gas right around 1040. And now they've started buying calls again right around 1215. Started buying calls again, selling puts. Blue line, orange line moving in the same direction, and prices moving higher. So that's AMD. Here's that pullback to VWAP as traders started buying calls and selling puts again. 155 call wall acting as support. All right, let's take a look at, let's see, I have ARM on my list. And a bearish day here in ARM. Let's see what options traders are doing. ARM holdings. Get it over here. Go back to ARM. So in the case of ARM, traders were selling calls, buying puts, price move lower. They took the foot off the gas right around 1040, price consolidated. Now, just the opposite of AMD, they have resumed selling calls, buying puts. All right, so bullish day for ARM here. All right, the next on my list, Microsoft, very bullish day. Note that 420 is the call wall. So that level did move up from yesterday. So there was a shift higher in the call wall at Microsoft. So initially that call wall acted as resistance. Price reversed higher as aggressive buyers started to come in. Price moved above VWAP, rising cumulative volume delta. So checks those boxes for a long entry. Let's see what options traders are doing, then I'll get back to Market Pulse. Let's go to Microsoft. So here's that initial move higher. Traders buying calls, aggressively buying calls, shown by the rising orange line. Take the foot off the gas at the 420 call wall, and then they start buying calls again right around 1015. And they were also right at this low here, started selling puts. That's shown by the rising light blue line. Blue line, orange line moving in the same direction. Again, very bullish. And this is looks like a large block order, institutional order. Did not seem to have much impact on price. That was some large institution selling calls. And that's pretty typical of Microsoft to see those vertical lines, those institutional orders. All right, let's take a quick look at in Anurag. You can go here to bookmap.com. Let's go to the knowledge base, click on more knowledge base, click on add-ons, and we can click on Market Pulse. And over here, we're looking for price change. So this will give you a detailed explanation of price change. So there are a number of algorithms available with Market Pulse. I like this price change. I've also tried the volume pressure and the volume pressure imbalance. Right now I'm using price change, and it's calculating the deviation of the last trade from the average on an interval, and then the percentage value shows how close the current deviation is to the max deviation. All right, so you can go take a look at this for more information. So again, we can, this doesn't work all day, every day, but it does tend to confirm the pullback entries. So price moving above VWAP, traders taking positive delta positions, rising cumulative volume delta. I'm looking for long entries. So pullback entry lines up with this red, that's the max deviation on the downside. All right, so that's what I'm using that for. And also, if we zoom in, I've showed this, I think maybe last week, that this price change indicator can lead price, show a kind of a leading indicator. All right, so let's move on. Take a look at NVIDIA. Bullish day in NVIDIA, 950 call wall up above. Let's check the boxes. Price moves above VWAP, rising cumulative volume delta. You can just see all the green volume dots, a lot of aggressive buyers. Price targets up above, especially at right around the 950 call wall. Looks like some traders are front running that at 949. Let's see what options traders are doing. Let's go back to Hero. Flow alert comes in at the cash open just maybe a minute or two after. Traders buying calls, rising orange line, selling puts. Note the notional value for NVIDIA alone is huge. For calls, 1.5 billion. For puts, 1 billion, for a total of 2 billion. That's pretty typical. The largest notional value for any stock that I ever look at is NVIDIA. Very bullish day in NVIDIA, heading up to the 950 call wall. And let's take a look at Tesla. All right, so started a bearish day here in Tesla. So looking at this, price quickly moved below VWAP at the cash open. That's the opening print. Very bearish. You can see all the magenta volume dots. And that was at the 180 call wall key gamma strike. Price broke below that level at the open and went down to the wrong tool. went down to the 173.33 hedge wall that acted as support. These levels do work, folks. That's the 173.33 hedge wall acting as support. So checks the boxes for a bearish setup, key level reversal, price below VWAP, falling cumulative volume delta, multiple magenta volume dots. You would have to be quick to catch this. Let's see what options traders are doing. Let's go to Tesla. All right, let's zoom in. So from the open, traders were selling calls, flow alert comes in, traders selling calls, buying puts, price moves lower, down the 173.33 hedge wall, acting as support. Traders finally take their foot off the gas right around 10:30, and Tesla consolidates and starts to move slightly higher. Now it looks like the options trades and hedging flow are shifting bearish again. Traders are starting to sell calls again and starting to buy puts. All right, Anurag is asking about, let me check for questions. When you trade stocks, do you just buy calls, puts, or do you buy stock? If I'm day trading, I'm typically buying and selling shares of stock. That's what I do for day trading. And for swing trading, I'm typically using options. In long-term trade, stocks and options. So again, day trading, just buying and sharing stock. Swing trading, options, and longer term stocks and options. And Anurag, the DXFeed data is going to be the same whether you get it from, whether you pay Bookmap or whether you, that's the easiest way to do it. I don't see any reason to do anything else. That is the easiest way to get DXFeed data on Bookmap. All right, DK asked in ES, did the call wall move down? Well, the call wall is on SPX, and no, that did not move. So the call wall is at 5,300. Let's go to ES. All right, so for SPX, this is the call walls that I look at. These are the call walls. And for SPX, that level remained at 5,300. And for SPY, the call wall did move higher. So for SPY, the call wall moved higher from 525 yesterday to 530. All right, and are there any other questions? I've got maybe a minute left. If anyone wants to take any look at any stocks, and you're welcome, DK. All right, last call for stocks. All right, WRB says all good. See Dan P and Katinga still typing. All right, Dan P asks, do you ever trade crypto? No, I don't trade crypto, but I do trade equities. I trade equities all the time. So I do trade a crypto-related stock, Coinbase. That's a good mover. But I don't trade Bitcoin itself or Ethereum or any other. All right, continue. You're welcome. All right, I'm going to wrap it up. My time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. I love this interactivity. And remember, Friday, options expiration, call dominated. And I will see you on Friday. All right. Thanks again, everyone. Have a great afternoon. Bye.